PCLA still showing a lot of weakness. So the stock is down 22% today due to a continuation of extreme volatility following a massive 76% plunge yesterday, the 15th of July, when the stock crashed from roughly 3.39% to, sorry, $3.39 to $0.81 amid wild intraday swings between $0.54 and $3.74. So below, I'm just going to read out what is behind this dramatic drop. So the first residual panic from yesterday's sharper decline. The stock's highly unusual intraday swing, falling 76% and yet briefly rallying to over 3%, $3, even more, $3.7, triggered fresh sell-offs today. Okay. Volume spiked over 20 million shares. Over 20 million shares traded in that session, I want to believe, largely on falling prices. After such a large one-day drop, many traders scrambled to exit positions during today's trading session. During this, the market hasn't opened this. Okay, well, the ones that are participating are stand right now in this pre-market session. It seems they are scrambling to sell off. So analysts, technical signals. Analysts noted technical indicators remain bearish, with averages short and long term are signaling sell. One technical site called it a sell candidate and noted negative momentum still persists. Extraordinary volatility. The stock's volatility is off the charts. Average daily swings over the past week have been around 136%, with yesterday's range nearing 600%. Even on calmer days, this kind of volatility often fosters steep follow through declines. Speculation, technical trading, not fundamentals. There's no major news, earnings, or structural update behind today's decline. Instead, this looks like a short-term technical and sentiment-driven move rather than a reaction to new business information. So, bottom line, PCLA's drop today of 22.7% is simply the fallout from extreme technical selling and panic momentum generated by yesterday's dramatic tumble. With no fundamental catalyst to stem the decline, the negative sentiment carried over into today's session, into this pre-market session. What you should watch next: check for support areas. Technical analysts highlighted the support zones near zero point 0.7 to $0.8. Monitor trading volume. If volume drops, the selling might be exhausted. If it stays high, more downside could follow. Ideally, wait for signs of consolidation or a reversal set up before considering entry. Okay, we have some more down here. Let's see. Institutional liquidation. This is a deep dive into what may be behind this. Let's see. Here's a deeper breakdown of what's fueling today's continued drop in PCLA following yesterday's historic sell-off. So, institutional liquidation. AI Invest highlighted heavy institutional selling with 57% of shares changing hands. 30 million shares, suggesting funds were unloading positions amid no alarming news. From Fintel, Morgan Stanley held just 2,162 shares, a negligible position indicating no strong institutional support. Nasdaq compliance pressures. The company remains under pressure to maintain a minimum $1 bid price. They were granted until October of 2025. They were, yeah. So market participants may be avoiding bid support, fearing reverse stock split or for dilution, which could add selling pressure. Okay, no fundamental news, no fresh product news, earnings update, or strategic shifts. The most recent filings and public offering were a month ago, between the 23rd and the 27th of May. The current movement is purely technical and sentiment driven. So yeah, it's just holding the loss of 22.74%. Okay, what do we have here in terms of projections? We have 1.72 upper projection on this 4-hour chart. No guarantee that that will be the case. We could, if we apply the market greed, we are likely to see upper projections that are okay. Before we do that, let's have a look at the price pressure momentum on its four on this 4-hour chart. You can see severely bearish, extremely bearish. However, second derivative is positive. It is a healthy positive value declining. I mean, indicating that the weakness, the momentum, the bearish momentum has is tailing off. It's losing momentum in terms of the bearish trend. The bearish trend is losing momentum. That's what it's indicating. So a bottom may be forming. You can see that it's gradually forming a bottom. Yeah, but no guarantee it's going to print 1.72. We can use the market grid to find possible resistances that can occur. Let's have the market grid. Okay, yeah, we have. Okay, as a matter of fact, we have even lower prices that can print. You can see here 0 point very negative values. Obviously, those are not real. We have 0.0959, 0.0367. Those are possible lows you can print. Okay, yeah, those are possible lows you can print. Let's have a look at the 3-hour chart. On the 3-hour chart, what do we have? We have okay, yeah, they're looking a lot better than what we have on the 4-hour chart. They're looking better, a lot better. Okay, let's look at the 2-hour chart. Yeah, the market grid is also a lot better here. So our best bet in terms of downward projections will be the 4-hour chart. It's so far it's indicating the most bearish of downward projections. Yeah, okay. So we have here. What do we have? Do we have upper projections here? We have 3.22, 1.54, 1.40, 1.16. There's no guarantee those will print. Absolutely no guarantee those will print. Let's come back to the 2-hour chart and see whether we can see for upper projections as well. 2.81, no guarantee that will print as well. 3-hour chart, what do we have in terms of Fibonacci projections? We have 1.48, 1.62, 1.7. So just see what you make of PCLA, and thank you very much for watching this video.